The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the January 22nd, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. If you can't dial in, we've got you covered. But please send these emails early, steve@tfnn.com. In the subject heading, please put radio show question. Of course, in our Tigers Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got most of the indices in the green. The exceptions being the transports are down about 57 points, but the Dow up 30, the S&P 8, the Nasdaq 60, about 0.7% to the upside. The Russell a couple points. The semis up 1 4/10%. That's 26 points, trading out 1941. The spot volatility index down below its 50-day exponential moving average. She's trading out at 1265. Gold is flat. Silver is up 4 pennies. Light sweet crude is off 20 cents. Natural gas up a penny right now. Woohoo! You've got T-bonds, the 30-year up 8 ticks. Leading the charts, the upside, it is Tesla up $39, trading out at 586. That's up 7%. Booking Holdings up 17. You've got the Intuitive Surgical up about 11. Google up about 11. To the downside, Netflix. I believe we had a call, or we were looking at the chart as we were going to the close yesterday on Netflix. It had that Rhodes momentum indicator top and suggested it would trade lower. Well, it is. I think they had a good earnings report out, but doesn't matter. We just look for signals of buyers and sellers. We let them tell us what they are going to do. Boeing is trading down $8, trading out at 304. Blueprint Medicine's down $8, 10%. Estee Lauder is off about 2.5%, about $6. Of course, I want to look at what you want to look at. The first request coming in from Jim. Jim wanted to look at Occidental Petroleum, and he's in a long position, and he was wondering, what do the charts say to us? Well, right now, Jim, you don't like today's action. Now, you don't like today's action, not just because price is trading lower, but because price is trading down below the bottom of its daily profile. That's 44.15. Now, you really need 2 candle closes below that, but you're fairly well below that area. And that does suggest to us, as we take a look at these charts out here, if we go to look at the weekly, the level of support from a Taz market profile standpoint would be 40.20. That's the old top of the box. The monthly does have a bullish structured profile. Month is not over. You really need the month, that's this month here, January, to close well above 41.95 or 43.20 in order to suggest a move to 53.69. So in summary, these charts here, Jim, tell us that to anticipate and expect a pullback. Let me pull over my other charting tools. Now I'm going to pull over my newest version here. Have got some of the code here updated so it automatically populates for any time frame the wave counts, the Chapman wave counts out here. So a couple of adjustments to be made, but working pretty good. So as we take a look at this, is also going to have all of our TD9 counts and everything else out here. So with regard to, Jim, with regard to where Occidental may be headed to at this stage of the game, we don't have any kind of topping pattern on a daily basis. That doesn't really matter, right? We're not always going to have a TD9 count, a 7th wave move, or Rhodes momentum indicator at a top or bottom. It's just when they do show up, it's very helpful because it gives us a little bit of an edge out there. Right now, what this is suggesting Occidental Petroleum should head back to the 40.13 area. That is its breakout level. Now, if we go take a look at the weekly time frame chart for us, you can see that what actually occurred here is prices back below a key resistance level. That was 45.42. That was its TD9 count resistance area out there. So that's not good. If I look at the monthly time frame chart, now we can see, you and I can see, all of us can see why price in essence stopped where it did this month, because it was taking on Stevie's red line. That's the oscillator and change line. We can see how that level has been tested a couple different times since it did change colors out there, and that is real key resistance. That's 46.27. So at this stage of the game, Jim, I think you should be in store for a retracement, and that retracement could take you back to the, we'll call it the 40.13 area out there. I hope that that helps you out. Thanks so much for writing in. Now let's go see, why isn't this chart? There we go. Thank you very much, chart, for working with me there and doing that. So that was the first question that came in. And let me see if there's any others out here. If not, we'll just take a tour around the markets. Yeah, no other questions at this moment in time. So let's go take a look at what the markets are doing, try to get a feel. So we had talked about how right now you've got all the markets in the green with the exception of the transports. Well, let's focus in on the equity futures contracts. We'll do this for Jay and many others out there. So Jay, we do now have two new market profiles to work with. We've got one in the Dow, the YM. So that's going to be panel number 2 from your right. And then we've got from panel 1 from your right, or the very right-hand panel, is the Russell 2000. So both of those, remember the Russell 2000 yesterday, it was trying to form new profiles. Finally, by about 7, 8 o'clock at night, the new profiles actually formed. They have taken hold. This makes more sense than what we looked at yesterday. Resistance 1708, support 1658. The center of that box is 1670 out here. Now, with regard to the Dow, its new profile is has been tested and rejected. Now, the profile that's been tested has been the top of that box, 29,174. That's really the number to be focused on. Yesterday's close was right at 29,174. Price is trading just slightly above that. If price can continue to trade above that, well, then the Dow is giving us a bullish message. But there's also a bearish message out there with regard to the Dow. Now, with regard to the ES and the NQ, no new profiles have formed out there. So price is above all resistance in the marketplace. If we take a look at where our price is trading, just with regard to primary indices and some important futures contracts out here, you're going to see that the Dow, Nasdaq, the ES Mini, all above the 2019 highs out there. The same with the New York Stock Exchange, even the same with the Russell 2000, the semis, the S&P, the Dow, and the cash indice as well. The only things that aren't, you got gold, silver, and treasury bonds out here. Trading above the prior year high is always a bullish signal, and really a signal of a potential breakout. If we take a look at the New York Stock Exchange out here, advanced decline oscillator is still below zero. That's your center panel out there. I'm trying to launch something else too. Where the heck is that icon? I mean, I know you guys can't see what I'm doing, but here we go. Just want to take a look at the market breadth for the S&P and the Nasdaq, and we'll do that when we get back from this breakout here. This is Steve Rhodes with TFNN. Would love to hear from you. 877-927-6648, or send me an email, steve@tfnn.com.
If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 49. S&P is up 11 points out there. Let's continue taking a look at the market. So we were looking at the New York Stock Exchange before we went to that breakout there. We were focused on I was focused on the advanced decline oscillator, the center panel out there. You can see that it's just below zero. Minus reading right now about minus 0.77. It'll continue to change out there. But the interesting thing about that is that when prices below that level, and this would be the second day in a row, it suggests that sellers are in control of the market. Now, my experience here with regard to this tool is really combine it with that spot volatility index. Now, that's the reason why the spot volatility index is in the bottom portion of the screen out there. And there's a couple of lines out there. The yellow lines are the Bollinger Bands with a 50-to-1 setting out there. And the red line happens to be the 50-day exponential moving average. You can just look at the data box that's in panel number 1 out there as to see that the spot VIX is trading at 1256, but the 50 days at 1329. Nothing will ever get moving to the downside in the New York Stock Exchange, even though its advanced decline oscillator is below zero. Until the spot volatility index is trading above that 50-day exponential moving average. So in this case here, New York Stock Exchange is saying, you know what, the market breadth is a little bit suspect, maybe a little bit bearish. Well, we can't trade the New York Stock Exchange. It can give us a feel for the overall markets, but you and I can trade the S&P and the Nasdaq. And we take a look at its market breadth out here, weekly, daily, 240 and 60. This is the S&P 500. You'll see that each of their dials, each of their speed dials, so to speak, are in the bullish quadrant out here for all of its time frames. There's 4 different time frames that it can track. If we go take a look at the Nasdaq 100, it is the same there. So market breadth with regard to the S&P that you can trade and the Nasdaq is bullish for all time frames as we speak right now. No reason for us to spend any more time on that. Let's just simply continue to take a tour. I had mentioned the Vix Index here. Vix Index here, you can see it below the 50-day. Yesterday was nothing more than a test and rejection of that 50-day. That was a caution sign for those folks that were bears out there because they really needed, sellers really needed, bearish people really needed to see the spot volatility index close above that level. If we take a quick peek here at Goldilocks, see what it is doing. If I take a look at this chart with regard to how gold's trading in relationship to the other major currencies, those major currencies being the euro, yen, and pounds out here, trading lower, slightly lower, but still trading lower in all of the currencies. What's really going on in Goldilocks, gold here has found resistance at its weekly horizontal trading range at 1561. It looks to me like a consolidation trading really between its monthly horizontal trading range level. So we're looking at a move between 1601 and 1462. Very likely Goldilocks headed back to that 1462 area. Now could find support at 1493, its weekly horizontal trading range, but that 1462 sure looks enticing when we take a look at the charts out there. With regard to T-bonds, they're having a nice move, but they're running right into resistance here. They're trading out right now at 158 and 25/30, and the top of the Taz weekly profile 158 and 25/30. So we're in the make it or break it zone for Treasury bonds. Now, if Treasury bonds close above 158.25, that's telling us of a breakout and a continued move to higher price. Move to where? It's a good question. I don't think I've done this here. I don't think I've done this for us. Let's go do this for us, or at least let me get it rolling and we can come back to it, which is just take a look at Treasury bonds, and it's 4 different sets of market profiles: daily, weekly, monthly, and quarterly. So it's a lot of data to churn through, but here's what we've got. Interestingly enough, the quarterly have populated. That's in the lower right, and prices above its profile. That's bullish, folks. That is bullish. You can see here on the weekly, price trading right in to the top of that profile on a monthly basis. So this would help us to identify what would be the next projected target from a profile perspective. Well, you can see it's above the daily, trading right into resistance on the weekly. It's above the quarterly. That says that if we do see a weekly close above 158.25, very likely you're looking at 166 out there as the target. Now, what does that mean? Well, it just means that's what the target would be. It means that you have the guesswork would be you've got traders around the globe that just simply want to exit their currency and get into U.S. dollars. This is a very simple way. I know most folks just really take a look at one thing. You can't just take a look at one thing. I know we all like to be curly, in that movie, which was that movie, City Slickers or what have you, but it's just not the deal out here. But in any event, people will just look at the U.S. dollar index to try to figure out whether or not the U.S. dollar is strong or not. Really? 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 Come on. Come on. What about the U.S. Treasury bonds out there? If you're putting your money from a long-term standpoint into those, aren't you really saying that what you like are U.S. dollars? The easiest way to get into U.S. dollars is just buy a futures contract. That's all you got to do. In any event out there, let's continue peeking around out here. What do we have to take a look at? What do we have to take a look at? Boy, not a whole lot. Let me see if there's any questions out here, because we've covered gold, bonds, but I don't see anything else out here. I guess I can go just simply kind of guess at some other things that folks want to see, like natural gas. I know there's folks that are interested in that. I've tried to catch a bottom there and have gotten a crush. Let's go take a look at what's going on inside of natural gas. So let me pull up the chart here. We're taking a look at the March contract. We have no bottom yet. Now, what natural gas has done, I did make a top with the TD9 count. Right now, it is in wave number 7. That's letter G on my screen out there. Is that a bottom? I don't know. It could be a bottom. But if you're asking me, is it a bottom right now at 1:25 in the afternoon on January 22nd? And Stevie's son will say, no way. Nope, not a chance yet that we have seen a bottom. Why would Stevie say that? Well, that's a good question. One of the reasons I would say that, let me pull this, let me try to get this chart over here. This chart here is a great little, so if something's going to bottom, something's going to top. If something's going to bottom, what we should see are resistance levels fail. If something's going to top, we should see support levels fail. The question becomes, where's support, where's resistance? Well, one of the cool tools that you and I can use, we can just simply use our breakout, breakdown levels that come to us via using that TD 9-count pattern. And we can switch the time frames out here. So here's a great example. Now let me just simply expand the lines out here just so you can see it visually, as we're all visual. So let me just expand. Right now I've just got it coming out 35 bars. That's the green and red lines from their track. But now let me just double that, so we've got 70 bars. And now if I were to ask you the question, why did natural gas in its little rally this morning stop where it did? This is how powerful understanding this breakout and breakdown lines are, even more powerful than just simply knowing that you've got a potential 9-count top or 9-count bottom. And price stopped right where it should have, right? You had two resistance levels, one at 1.935, one at 1.941. Where did price stop in natural gas? Right at resistance. No way that you or I can call this a bottom. Not yet. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we've got a question that has come in. You too can send me a question, Steve at TFNN.com, or no, that's the only place you can send me the email. Just inside that subject heading, please put radio show question. That would be great. So John in Sarasota wants to look at the SSO. I think is SSO. Yeah, let me not guess what it is. SSO is the UltraShares S&P 500. So John's question is: so will this be moving up soon? Well, it's already been moving up. You're looking at, in essence, the S&P 500. So so how do we take this apart? What's the easiest way to take that apart? The S&P 500 for you. Let's do this. Let's go take a look at the daily chart out here for the S&P. Just simply start there. Here, as we take a look at it, so here's the daily S&P 500. Today is going to be bar number 9 of a TD9 count. So, John, if there is to be a top, some type of short-term top, it could be today's high, it could be tomorrow's high, based upon that pattern. The S&P cash itself is in wave number 6. That's letter F on my screen out here. So there's two potential topping signals. Now, price is starting to move higher with energy, so the Rhodes Momentum Indicator signal is not in play. John in the den earlier so a different John was talking about the S&P 500 and just the longer-term ABCD pattern. Let me go ahead and pull that up for you. Well, now, when I say longer-term, let me make sure that we... that I'm just referring to, John was referring to coming off of the 2018 December bottom out there. And there's an easy 1-to-1 A to B equals CD pattern that's in play out here. So let's go take a look at it. This would be using the low from December 26th, your A point. Your B point out here happens to be the high from May 1st. And your retracement was the retracement down into the low on June 4th. Come on, work with us here. We're live. There we go. So now you can see your 1-to-1 A to B equal CD. That comes up to a price level, a projection of 33.36. Right now, the actual high that we've seen is 33.37, 77. How about that? 3 sevens. Sounds to me like somebody has got the one-armed bandit going on. Now, here's the deal. This is a daily time frame chart out there. Let me pull back the other chart. It might be easier for you to see. John, for that A to B equals CD pattern to confirm, what you need to see some type of bearish reversal candle. Now, do we have one that's in play right now? We don't. Now, you could see it tomorrow. So that would be step number 1. You're saying, will this go ahead and take off? Here's the deal. As long as price really remains above Stevie's green line, which right now is 33.21, the market should continue to move higher with no kind of retracements whatsoever out here. But we do have patterns. We've got John's A to B equals CD coming off of the last year's low. We just look at that pattern. That could be a topping pattern. Many people, when you first learn that pattern, or I should just raise my hand and say, well, I did when I first learned that pattern, I bought or sold them unconsciously out there. And then after I had my arse handed to me several times, I said, well, you know what? I like the pattern. It's great from a projection tool standpoint. However, you can't just buy or sell an A to B equals CD, such the one that has to be in place. And that's where I developed integrating other tools to assist us. And those other tools specifically just happen to be Japanese candlesticks, and where they really are of value to you and I. And they're really of value, not in the middle of the move. They're interesting. It's like reading a book, and it's like, something you didn't expect. But where they really mean something to us is at the end of a pattern or the beginning of a new pattern out there. We don't have that. So your question is this going to be moving up soon? It has been moving up. I've got some caution signals out there, but this stuff has to be confirmed. And more important than that, and the most important thing, and here with regard to the S&P 500, if it does top, we would go take a look at Taz market profiles, but there would be no change in trend. It would be normal for an instrument to pull back to where it had broken out. And in the case of the S&P 500 right now, that's 3126.09. However, not so fast, because today is going to be bar number 9 of a TD setup 9 count. That means that we're going to see a new level of support form. What's that level going to be? It looks like it's going to be the low of bar number 2 here, and that's going to be 3260.86. 3260. We're at 33.21, so it's about 80 points. So that could be, if we do get a topping signal, just pulling back to that as a level of support, that would be normal out here. So, John, if I answered your question, I know you're not on the line, so to speak. You're on the email line out here. Now, if we don't see a top, if we don't get a confirmed top, if we don't get a bearish reversal candle, if the TD9 count just doesn't stall price at all like it hasn't over the past month or so, then what's the next price projection? Well, in our A to B equals CD level, that's at the 3501 area, 3501. Say it can't be. Look, folks, remember a few years ago when I said the Nasdaq was headed to 8,800? That's already unfolded, so it can be. It's just the A to B equals CD pattern out here. If we look at the longer time period, we did this, right? We did this last week. We just simply put it on the quarterly time frame. Here, if we take a look at the quarterly time frame, it helps us to just simply get rid of a lot of the noise that is out there. Well, then the S&P has already exceeded its one-to-one price projection. That's taken us back into the 2009 area. That price projection, 32.78. And what we're saying here is price is stronger along the C to D move than it was along the A to B move. And this has a price projection on the quarterly basis of the 36.77. So what do we want to do? Look, there's existing topping signals that are out there. You just want to wait to see how the market handle these over the next couple of days out here through the week, and and we'll just simply go from there. And we'll just simply look to maybe there's going to be a new profile that forms. Since we received one last week inside the Nasdaq, now we've received two here for the Dow and the Russell 2000 over the last couple of days. Maybe the ES Mini will give us those. What's real important here is there really no change in trend until you see price close below support. And support here would be the bottom of those profiles. In the ES Mini out there, you're looking at 32.16 will this be moving up soon? It's already moving up. Let me answer it this way. When you take a look at this charts, what are two things that you notice? Now look at these charts. There's two things that you should notice. The first thing is the ES Mini and the Nasdaq are at new all-time highs. They are trading above resistance levels that were established just simply a couple of days ago out here. And if you take a look at the Dow and the Russell 2000, they are not. So what we have here is the Dow and the Russell 2000 are a little bit weaker. Now, the Dow itself has pulled back and tested the top of that daily profile. That is bullish, John. So I would say it like this. If you see the Dow Equity Futures contract, or even the Dow Cash Indices, but certainly the Dow Equity Futures contract, trade above the high from 2 days ago. That high, let me give it to you, and close above the high, 29,362. And inside the Russell 2000, the number was 1715. If that happens, John, then what this signal should be, SSO, should be taking off to the moon. Now, where's the moon in the terms of SSO? Well, in the case of SSO, we can go back here. We don't necessarily have to do the quarterly time frame, although we could. But just let me come back to take a look at the daily time frame and see if we can punch in an A to B equals CD pattern out here. So let's go do that. Not much different than just starting with the December 26th low and the high out here from May Day and the low out here from June 30th. And you can see that that pro shares is above the 1-to-1. So the next target out here, John, 167.86. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We'd love to hear from you. 877-927-6648. This is a chart here that I'm posting. We won't spend any time really evaluating it here, but there was a question in the Tiger's Den. Can you take a look at the Dow compared to the U.S. dollar index out here? That's what this chart is really looking at. It's a daily time frame. You know, if I go ahead and pull it back here, you'll get some kind of a feel for it, but won't really investigate it at this stage of the game. But look, folks, one thing that this chart, let me pull it back even further. I can just put it to a different time frame. But I think if I just do this, it's very clear that the king is back, right? The U.S. dollar. Look, well, first we can go back to 2009. That's when obviously the U.S. stock market had bottomed. When did the U.S. dollar bottom? Well, that was back in April of 2008 out there. We've got a request. There was a request inside the Tiger's Den to take a look at. I apologize. I forget who asked. It doesn't really matter, just as long as we get to it, right? So let me, what the heck is going on here? Come on. Here we go. Let's go to our 3 time frames. This is the Scorpio tankers. Is the request out here. Here's what we know about Scorpio tankers. We'll go look at both sets of charts out here. You've got price below the daily profile. That formed yesterday. Today's going to be day 2. So you didn't want to see that. That was a bullish structure profile. Says you want lower price. Well, guess what happened last week? It closed below its bullish structured weekly profile. Now you got 2 really bearish messages out here, in my opinion, breaking through bullish structured profile. So this is saying lower price. Now, profile-wise, the only thing you and I can do is go take a look at the monthly time frame. Price is above that. However, that's a very bearish monthly candle. Still only the 21st, but support out here is 21.35. So let's start with the monthly chart. Well, let me pull the charts over here first. And this is the daily, but let me just go punch into the monthly first, right? Because we said that didn't look too good. Well, no. Well, this all makes sense. So if you take a look at this equity, God, I like this automated wave count tool. What do you think, Peak? Pretty cool, huh? Just automatically populates it so I know what's going on. We know what's going on out here, and there's other things to come. But in any event here, if we do take a look at on a monthly basis, Sting, STNG, makes wave number 7 as well as Rhodes momentum indicator bottom pattern out there. And then price does what? Price runs all the way up into its TD9 count breakdown level. Now, didn't get right to the tick. That would have been 4180. A bearish message, you've heard me say this before, is that when you get the TD9 count this case here, a TD9 count top to unfold prior to resistance, that's a bearish sign out there. That's my experience in looking at this pattern in all of these charts out there. It doesn't work 100% of the time. No, I'm still looking for that 100% of the time out there. The best tool I found for 100% of the time are, do your work, do your analysis, take your trade, put your stops in there, manage the trade along the way, and then just go from there. In this case here, what this looks like to me is Sting, STNG, is going to pull back to the 2345 level. We got that's what the month. Now the weekly chart, what do we have out here? I've got wave number 7 as a top. Beautiful thing. Below their Taz market profile support breakout area is 2387 on the weekly basis. On the daily time frame out here, you're now below a TD setup 9 count. That was about 3 days ago. Here you've got a level of support at 2786 out here. So Sting looks like it wants to trade a bit lower out there. Oh, Fancy Nancy, wanted to take a look at Apple. I don't know that she's fancy, but I do know that she's Nancy. So let me come back. Let me change out the instrument. Let me actually go read the message out here. And Nancy's had good success in the past few months trading Apple calls, mostly day trading. Seems to be getting at the top of its current run, just under 320. What do your profiles say for the next few weeks out here? Well, price is above. Let me do this here. You asked specifically about profiles. We'll pull these charts back here. But let me just simply go ahead and punch that up here. What I was looking at on the other chart, Nancy, was price is already above its daily profile. That's today. Closed above it 2 days ago. Yesterday back below. Today it's back above 317.57. Mighty strong. That's your resistance level. 2 days above that says you want to head to higher price. Now, if we take a look at the A to B equals CD pattern here inside of Apple, you can see it's well above the 1 to 2 level out there. Hey, it is what it is. What's next? The 2.618 expansion area. That gets you to 362 buckaroonies out there. This is the weekly time frame chart that we're looking at right now. And if I look at the monthly as an A to B equals CD, that suggests 325. But now I would say not 325, I'd say 374. But 325 would be next up. But in answer to your question with regard to profiles, Apple looks bullish out there, and you're thinking of going to the bearish side, I'd say not so fast. Now, what we can also see, though, is that price is moving higher, doing it with less relative energy out there. And so what needs to occur, if you were to see some type of bearish reversal candle, price get back below the top of that daily profile, that's at 317.57 area, then what you could see is a move down to one of 3 areas. 297, that's its breakout level. 305, that's the bottom of this daily profile that's in play right now, and 310.12. So that's what I see when I take a look at Apple, Nancy. I hope that helps you out. Let's go out to Fort Collins and speak with Mark. Mark, thanks for calling. Thanks for holding. How are you today?
Good. How are you?
I am very well. Thanks for asking. And U.S. Steel, I believe, is that the instrument that you want to take a look at?
Yeah, I've just kind of been moderately following it. I don't have a position. I had one a while ago, made some good money on it, and I just wanted to see what your thoughts are on that.
Okay. So if I look at, so here's what we know profile-wise. Below the daily, right now this week, it's below the weekly, so 1034 is that. If we close below that, that suggests a lower price. You got a hammer candle back here on the week of August 26th, and we're trading below that level, 1016. We know when you trade below the low of a hammer candle, that's really never good out there. If I just expand the monthly time frame chart before we go look for any other signals, this would suggest to me that U.S. Steel is headed back to the swing point from January 2016 in the 615 to 825 area, at least for a test. Now, volume down there looks like about 199 million shares. This month you're at 192. We're only, we've got several trading days left in the month, so it's pushing towards that swing point with volume. So at this stage, before we go look at other charts, it appears that the January 2016 area is where U.S. Steel is headed to. Now, let's go look at my other charts. We might as well start with let's just start with the monthly time frame. So we've got a little bit of a bigger picture out here. Now, what the monthly time frame chart shows for us, Mark, is the breakout level is $8.52. So that's another area to be watching. The nice thing about the monthly time frame chart, it also shows us the importance of that oscillator and change line. That's that red and green line. And last month, that was a resistance level. It's like the bounce got up there and turned back down. When the line is red, it tells us we have a falling price oscillator below zero on the monthly time frame chart. That's a bearish message. So I would say 852 would be a spot to be looking at. Let's look at the weekly time frame chart. The weekly time frame chart, when this did bottom, it was with a seventh wave move out here. But price is trading below that at this stage. So that's just suggesting lower price. I don't see any other pattern to the downside right now to consider. And on the daily time frame chart, today is going to be bar number 8 of a potential TD 9-count bottom. Now that low could really come tomorrow or the next trading session. Mark, do me a favor, hold on through this break. I want to answer any other questions that you have, but I can't do that because we're going to a hard break in about 7 seconds. This is Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Right back out to Mark in Fort Collins, Colorado. We're taking a look at U.S. Steel. Mark doesn't appear that has much love going on out there. So after taking a look at those charts, and you're an excellent trader out there, is there something else that you're looking at, or to identify maybe a bottom, or you say you've been watching it for a while? So based on what we looked at, what you're looking at, anything else that I can answer for you, or any input or anything you'd want to share?
Keeping an eye on it. And if it's going to break any of these swing points, it looks like it was starting to break that 993. I was looking at the volumes for the week, and it doesn't look like it'll probably have enough volume to do another potential ABC down. So I was just kind of just checking it out, but I like that 852 and then the very bottom down in that 6 range are definitely places to keep an eye on. So that's good.
Perfect. Hey, Mark, thanks so much for calling in, and have a wonderful Wednesday.
Thanks, you too. Bye-bye.
You bet. Let's go to the last question coming in from Sat P, who is looking. Let's take a look at ticker symbol MDGL. That is Madrigal Pharmaceuticals, below the daily profile, the weekly profile, and below the monthly profile. That is not a good thing, meaning just simply price is below those 3 important support areas. As I pull this back and look, is there any kind of bottom signal out here? Nothing on the weekly. Let me take a look at the daily. Nothing on the weekly, daily. Price continues to find resistance at Stevie's red line. It does have this little hammer from back around the 6th of the month is what it looks like, and so a close below that would not be good. Yesterday was a close below that level out there. If I look to the monthly time frame chart, I know you're looking for if we see a bottom, and I'm answering that question. 1309 is the level to be watching on a long-term basis. That's the monthly level of support. 4028. Boy, that's down still quite a ways on the weekly time frame. And the daily time frame, I don't have another level out there. But I don't see a bottom pattern as we speak right now. Folks, thanks so much for being here. Stay tuned to 2 great hours. You got your favorite polar bear, David White, coming up next. Tom O'Brien after that. And I'll see you back on Terrific Thursday. Take care.